Good evening, everyone. Time for another silver update. Well, the big story tonight is gold. You can see we're at 1752 on the daily. Let's pull back, get to the minute chart here. This is 5 minutes. After the market closed, we have an extreme rally going on here, and it's just amazing. If you look at the video that I put on my favorites on my channel, it's an interview with James Turk, and he's interviewing Jim Sinclair of JS Mindset, I think it's called. And he has picked a target price for gold of around 17, I think it was 76, 1780, something like that. And he said that when gold gets through that price, we're talking about a move that will parallel the move that we had when we broke 500. Now, if you look at this move when we broke 500 that he's referring to, we pretty much entered into a new level of parabolic rises, and that's what Jim Sinclair is predicting. Now, the drop that we had on the Dow, I want to jump, there's just so much to cover, but I only have so much time. So let's jump over to the drop on the Dow that we had. And we are falling strongly. We've now crossed the zero line and we're heading down. A very, very sharp decline, even sharper than everything we had in 2008, except for perhaps this section here when we entered the fall crash. So the stock market is in a free fall. Again, the gold market is in a explosion to the upside. And I wanted to pull up a weekly chart of the gold price, and that's this chart, to give you an idea of the MACD breakout that we're looking at. So when we draw our trend lines on the MACD, you can see we have entered new territory with the gold price. So what's the top for the MACD? Is it 100? Is it 200? Is it 300? We don't know. We're in new territory. We pull out to the monthly, and you can see we're in a rising parabolic breakout on the monthly chart. So no one really knows where the limit is, but it is scary. So a lot of concern has come up lately for silver investors, and I want to pull up the silver and do a cross. If you do the instruments and then choose silver when you have a gold chart, you can go down and overlay the silver price over the gold price. And gold is accelerating higher, and silver seems to be kind of in a doldrum. You can see that the spike that we hit at the May peak in silver, I don't know why it's not showing a peak here for May. Let's go to the daily and see if that shows. There's our May 1st peak in silver, and you can see that gold is now surpassing that. The equivalent price for silver would be roughly 48 if it was the equivalent to gold, and you can see here's our differential. At that point, silver had surpassed gold and was rising, and gold was kind of leveling off. Now gold is rising dramatically and silver is kind of lagging. So the question is silver going to catch gold? Well, you can see in this move here that around 2011 silver caught gold and surpassed it. But there was a big difference here around 2010. We had the equivalent of a $26 silver price when we had a $1,200 gold price. So gold and silver trade differently, and there's a lot of speculation as to whether or not silver is going to rally in this potential deflation scare situation. So I wanted to take you out to the gold chart and do a stock overlay so you can see what happened the last time we had a type of deflation scare. So let's overlay the gold price with the Dow. And actually, let's do a relative 2, because that gives the actual prices as opposed to a percentage. So you can see that when the Dow started to tank in roughly the summer of 2008, we had a divergence like we have here, and the price of gold rose while the price of the Dow was falling. Now eventually gold gave way and started falling along with the Dow until about the election time or so, and then we turned around and gold continued to rise and the stock market continued to fall until the stock market made a bottom, and then it started to rise and gold continued to rise with it. So we've got something like that here, a very dramatic divergence. So let's pull up the silver price and do the same type of comparison on silver. And we'll go ahead and overlay the Dow. And what you can see is that the dramatic drop that happened in the Dow occurred for a while before silver was affected, and then silver came along with it. The Dow collapsed, and then silver made a bottom and started up. So they're a little bit different. They don't trade the same, and a lot of people are getting in a panic because they don't see the silver price exploding. Let's go straight to silver. They don't see the silver price exploding the same way the gold price is exploding, and the gold price is exploding right now. A frightening breakout. Like I said, the figure that James Sinclair chose just a couple days ago was 1770 or so. We're at 1750. So this is moving really fast, but I wanted to use this as an opportunity to look at some of the fundamentals. And this chart that I built here is a chart that is, or table I should say, is a table of some important commodities that I've chosen. And what I've done is I've created a column for the commodity, I've created a column for the yearly production of that commodity, and that can be in different measurements, and then I've selected the price, and then I've done the total value. So we'll start with the first, which is oil, and our yearly production is roughly 30 billion barrels. That's measured in barrels. We know our price is $100 a barrel, so roughly every year we produce and use up, give or take some. Remember, these are round figures just for the purpose of argumentation. I'm not going to dispute all the details because you can get different figures from different places, but these are just rough numbers with rough estimates to show you the size of these markets. So in oil, we produce and use up about 30 billion barrels every year, and the price, I set it at 100. We're bouncing around, but these, you can debate the prices, but that equals roughly $3 trillion a year in this commodity that is produced and then used up every year. Our next commodity, and I've done these in value by basis of value. In corn, we produce about 817 million tons. Now the page I used for that is something from 2009. I don't think it's changed that much, but you can see you've got your corn production for the world, you've got your wheat production, and you've got your rice production. And those are in metric tons. So your corn, metric tons, and you have to get a conversion factor for how many bushels per metric ton, because the price of corn is per bushel. When you do that conversion, and I think it was 35,000 or something, you multiply that by the bushel price, and roughly every year we grow about $224 billion worth of corn, and we consume that. Now with wheat, you're looking at around 700 with a price of 8. It's very close. So $220 billion. Gold, we produce 88 million ounces a year that are mined. I used the price of 1700, and that equals $149 billion worth of gold that is mined every year. Now that's not consumed. Virtually none of that is consumed. So that's, of course, different. That is a monetary metal, so it is stockpiled. For copper, we mine about 10 million tons per year, and the price per ton is about 10,000. So that's about $100 billion worth of copper every year. And the bottom of the chart is silver. We mine about 750 million ounces a year at about $40 an ounce. That's $30 billion. So the question you have to ask is this. The first thing you want to look at is which of these commodities are stores of wealth. Now, if you remember with oil and the $35 price we had after the crash, you had tankers floating off the South Sea of China that were storing oil because speculators were buying it up, expecting the price to go higher. And of course you've got corn. Now you can come up with your own figures as to how that can be stored. Wheat, we know, maybe go from the Bible and Joseph in Egypt, maybe 7 years you can store that. Gold, of course, has an infinite amount of time it can be stored. Copper actually rusts and decays, but it's used on a regular basis. And then, of course, silver has a minor amount of tarnish, but pretty much it stores forever, except for the tarnishing, which, if you're into numismatics, of course, like Morgan dollars, then actually the rainbow tarnishing of silver adds value. So I'm going to consider that a wash. So the question you have to ask yourself is, why do these values exist the way they do? Why do we pay $3 trillion a year for oil that's drilled and used up? $3 trillion worth of oil, but we only pay $30 billion a year for all the silver. That's a 100 factor. This lasts virtually forever. This doesn't. Corn is nearly 10 times the value of silver, the yearly production. Wheat, nearly 10 times. Gold, 5 times. And copper, 3 times. So the question you have to ask yourself is, why is silver at the bottom of this list? I think if you've been following my videos, you know the answer, that silver is manipulated. So I fully expect that our silver price will catch up with our gold price. You can see we're in a runaway gold market. I really can't tell you whether tomorrow will actually cross James Sinclair's price. We may do that. If we do, I fully expect that the price of silver will catch up with the price of gold, which it always does. The fundamentals are ridiculous for the price of silver. They far surpass the price of gold. And I think you're going to see a catch-up play. You can see from this chart that basically silver is trading at roughly 1700 for the price of gold, while gold's at 1754. Although the old high of silver was about that, and we're at 55 now. You can see we're in a runaway breakout bull move in gold. I really can't say whether it will be above 1800 by tomorrow morning. Again, we're in a free fall in the paper markets, so I just wanted to encourage those of you who have invested in silver that you didn't invest in the wrong metal. It's just that the supply, demand, and price dynamics for silver are so out of whack that it really needs to move 10 to 100 fold to even come in line with other commodities. And it's not surprising that it is the most suppressed, because it is, as I've said on my channel, it's the Achilles heel of the powers that be. I think as gold continues its rise, silver will ultimately catch up, and I will stand with my prediction that we will see 3-digit silver by next year. And we'll talk to you next time.